What's up, guys? Welcome back to Maverick's Point of View. So today we're going to be continuing our trading course, the free mini course. This section we're actually going to be going over. Let me look at my notes. This video is basically going to be about how to read the charts, aka candles simplified. So there's so many ways to talk about candles and how you measure a chart, right? But one of the starting points, like what you need in order to measure a chart, is candles. You can't measure it without it. I know other people got all these different strategies, Heikin-Ashi and line graphs and all this other weird stuff. I don't do none of that, so I'm not talking about any of that. What I'm trying to tell you is this: what I feel is the simplest thing, which is candles. So looking at candles, marking up candles, identifying candles, that's how you're going to frame your market so that you can actually trade effectively and know what you're doing. Now, the number one thing is candles are actually very, very simple. This won't even be a long video because they're very, very simple. As I told y'all, when you have candles, right? And I'll zoom in a little bit so you guys can see. I'm gonna go straight into it. What are candles? Well, simply, I already showed you guys how to look at a chart. You guys seen how to find your charts and get on TradingView. Once you're on TradingView, the first thing you're going to see are candles. You're gonna see your chart's not gonna look like this. You're gonna have to get rid of all the other extra indicators will be down here, like your volumes, levels, and I showed you how to change your colors and all that stuff. So anyway, this is a candle. 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 Each one of these, what I call bars or bricks, is a candle, right? The reason why we say candles is because candles have wicks. That's what these lines are, right? So these lines are the wicks to the bricks or the wicks to the candle. I say bricks because it just makes it simple for y'all to understand. We're measuring the market with these bricks, aka these candles. It's that simple. Now, what are the wicks? I know a lot of people are going to get nitty gritty, and I'm going to take a short portion of time to explain this. But the wicks are simply other candles on a smaller, lower time frame. So, as you guys have known, and if you don't remember, I said that I like to look at the charts on a bigger time frame, on a longer time frame, so I can get the best amount of data to be actionable to really attack the charts. We're on the daily right now, so that means each one of these bricks, right? Each one of these bricks represents one day, right? So as you see, if you look at the dates below, you got February 20th. This one is February 23rd, etc., because that was the weekend. And then you got February 24th, etc., etc., etc. So each one of these bricks right now, because I'm on the daily time frame, each one of these bricks, as you see, one day is a day. Now, if I go to the 12-hour, as a matter of fact, I'll create an example just to show y'all what I mean. Boom. So I'm going to take this wick right here just so we can identify, and I'm going to show you guys exactly what I mean. So when you see this wick, right, this wick to the brick, this is the brick, this is the wick, and this bottom part is a wick too. You see the lines? Yeah. Let's zoom in. This is a wick. This is a brick. This is a wick. This is a wick. You know, you're seeing these big wicks. Those are other candles on a smaller time frame. You're going to see right now when I switch over to the 12-hour, which you guys don't have the 12-hour time frame. It's a customizable time frame for if you pay for it, but you don't really need to stick to the free version unless you got extra money. So, as you guys see, all of a sudden, that wick went from just a long line to now being two separate candles, right? So we have the first half of the day at 5. On this chart is 5 p.m. And on the second half of the day on this chart is 5 a.m. And vice versa. Then the next one will be, because we're on the 12-hour chart, the next brick will be 5 p.m., etc., etc., etc. The point is, as you zoom in, this wick becomes data. Simple. It becomes data you can measure, data you can look at to determine, make whatever determinations you're looking at. That's what these wicks represent. So now I'll go to the 4-hour. So now you see that 12-hour movement, those 12-hour bricks turn into a bunch of 4-hour bricks, right? So now each one of these bricks represents 4 hours. The whole point of this is, as you're going lower in time frames, the data you're seeing either gets condensed as you're going up or spread out as you're going down, right? So when I say going down, meaning daily, 12-hour, 6-hour, 4-hour, etc., 1 hour, that's spreading out the data, right? As you're going up, 4-hour, 6-hour, 12-hour, daily, that's compressing the data. It's way simpler to look at the data once it's compressed and you can see the longer term movement. The more compressed the data, the simpler I feel it is to look at, because you're not being manipulated. The wider you spread the data, meaning the smaller your time frame is, the more you go down on time frames, the more manipulation the market makers, aka the banks, try to do, right? If we just look at this simple, the banks are in this to make money. We're just in this to make money with them. And we have to look at it how they look at it. They're not looking at the smaller time frames. It's that simple. The bankers are not looking at smaller time frames. Big money is doing big movements on big time frames. That's simple. And we want to do what the banks are doing, right? We want to make money like they do. So now if I go back up, 4 hour, 12 hour, all right, so now it's a wick again, daily. So now it's a bigger wick, as you guys can see, weekly. So now it's a larger wick. The point I want to identify is, you see how now this data gets more condensed and it's simpler to read. Like as you're looking at the data, it gets shrunk. The point is, it's easier to mark up levels and zones when you're looking at compressed data on bigger time frames. It's that simple. Don't I want you guys, when you're going through this course, do not complicate these simple concepts. Keep them simple. One of the things that happened to me when I was learning how to trade, right, was I wasn't explained the information in the simplest form, right? And I felt like something was missing because it wasn't being explained. Like I just had to look for something. Like, I had felt like, oh, like I don't understand this because it wasn't kept simple. It was like, oh, this and that, and this person's teaching passed from this person and this person, versus just let me get what the simplest form of it is and understand it in the simplest concepts, the simplest way, so I don't get confused when I'm trying to do what I need to do, right? Y'all don't need to know what the candle is any more than that. Y'all don't need to know what a candle is any more than that. Y'all don't need to dig into what a candle is. Y'all don't need to get into the nitty gritty of candles. What you gotta focus on is just the fact that these bricks, aka candles, are how you measure the markets and how you mark up your charts, how you see who's buying and selling and who's winning, right? This is how you determine if buyers are up or sellers are up, by looking at their bricks and seeing where the volume is at. What do I mean by volume? It's simple. The volume is what the real movement, the bigger movement is on the chart at the time. That's where the volume's at, right? So when this wick happened, obviously it was a lot of buying momentum, but then sellers kicked in. And then sellers kicked in and then they lost down here. And now buyers kicked back in and now we're going back up. So I want to look at larger time frames because that's what helps me see bigger data that's going to move for a longer period of time, so I don't have to be glued to the chart. Most of you do not want to be stuck on the chart all day. You don't want to be stuck on the chart. You got a job, you got 9 to 5, you're just trying to make a few extra $100, $1,000, whatever the case may be. You're not looking at it. Why stress yourself out looking at all this small, wide, frantic data? That's what retail traders trade, lower time frames, and that's what lower time frame data is. It's frantic data. Let's keep it simple, right? So frantic data moving like this, right? Now the chart moves like this. But the smaller you get, the lower the time frame you get, the more you get this, right? This, and it's hard to read this versus just, right? Let's keep it simple. This is what I see. This is what retailers traders see, and they get in and out. And a lot of them lose because there's so much of it versus just simple. Like if you look at the chart, it's smooth movement. You got a little bit of messing around, but you can clearly see that. Like you can see if I make a box for y'all right here, I can clearly see that the chart is just going sideways, and I can clearly identify and just wait and be patient. It's much harder to do that on a smaller time frame. This is what it is. You don't even need to understand it more than that. Keep it stupid simple. That's one of the rules in this course. KISS. Keep it stupid simple. So anyway, that's candles. It's literally that simple. That's what candles are. That's what they do. Another thing people like to talk about is like candle patterns and stuff like that. I'm not gonna get into that in this course. I really don't pay attention to them that much. You guys you can literally Google it. Matter of fact, hold up. Okay, so I'm gonna Google it for you. Candle stick patterns. Look, you can get a free cheat sheet right here. You can pay for these ones, or you can just look at the images. Like, I do not get obsessed with all this. You see, they've got names for them: double tops, triple tops, hanging. Like, I don't get obsessed with all that. I literally just see what the winning team is doing at the current time. Let's go back to the chart. So what do I mean? I just want to see who's taking over, who's on the winning side at the current time that I'm looking at the chart, and bet on that. That's that simple. Don't make it any more complicated than that. If you make it more complicated than that, that's why you lose, because you're complicating your head. Trading is not hard. It's very simple. Traders lose because of what's going on here. Not what's going on here. what's going on up here. So the simpler you keep it on here, the simpler it's going to be up here, and the more action you can take. It's that simple. So this has been Candlesticks with Maverick. This is my point of view, and that's it. How the markets move is going to be the next video. Thank you guys for tuning in again. This has been Maverick's point of view, and I'm out. Peace.